Inflation could turn out to be higher and more persistent than we expect. Listening to the hero of today's episode, you may sit down, couldn't fight away vertigo. What Fed's decision rate may bring to the US market and how it will weigh future performance. Welcome to the next episode of Blockrevision, and let's begin. And right now let's jump to market movers section, and we are going to market calendar focusing on inflation rate of Canada. So inflation rate year over year gauge has turned out to be same as forecasted, and right now we are at the decelerating pace where we can find that inflation is slowing down a bit. However, price pressures in some areas still are at the hottest levels in nearly a decade. So to this the most hot topics right now, we can contribute such areas as shelters that are at over 4% rise, and transportation that is right now at over 5%. So such sectors as housing costs and other rentals and new home prices, everything add up to this gauge, and in spite of what these metrics may say, that may be just a correction during a way to the higher inflation rates, and some policymakers even claim that we are just on the way to creep to a average of 3.9% in the third quarter. Also on Wednesday we had Fed interest rate decision that remained as it was before at nearly 0% level, so to be exact at 0.25%, and afterwards we had Fed press conference that we will talk about a bit later in this episode. And on Thursday we already had a GDP growth rate quarter over quarter published, and this gauge turned out to be 2% lower than it was forecasted. So lots of economists were suspecting this expansion level, as it was during the first half of 2021, to be sustained. However, particularly in light of the threat to global growth from the Delta variant, we can see this deceleration. So in spite of what Fed was saying, those delivery of vaccinations, those unleashing of pent-up demand for services, and mixture of government stimulus is not really accelerating the pace of the growth as it's expected. So it's maybe worrisome for government, and we need to admit that right now we are getting into this deceleration growth environment, where at the end of the first quarter may have been a peak in the economic growth rate. So the 6.5 might be everything that we can really achieve right now. The Fed sees the economy growing to 7% in 2021. Right now, it's not been achieved. Now let's talk about the earnings season, where we had on Wednesday Facebook, Shopify, and PayPal from the big tech, and we can find that those earnings has beaten all of the forecasts. Facebook by 90%, PayPal by nearly 2%, and look at Shopify that has beaten expectations by 128%. So the e-commerce sector is going really good. So it brings good expectations for today that will be where Amazon has its data published as well. It also should be over the estimations. So right now there are no threats to the market due to earnings data. All of them are highly good, and we can find that it may bring another fuel for the further growth. And let's get to the economy view, and we are getting to the most important topic as of yesterday. It was FOMC Congress, where Jeremy Powell said that Fed is holding their benchmark interest rate in a 0 to 0.25% range as it was before, and also Powell said that officials have taken the first deep dive during their meeting in order to set a decision on taper timing when the things will go well. So right now there is definitely no specific data that any assumption of when taper timing may finally happen, but it's not happening definitely now or even in September as some economists claim, but Fed is trying to assure us that the pace of asset buying will slow down late this year or early next. So it means also that there are no expectations right now to taper MBS support. So the house prices may get even higher than they are right now. So they have literally admitted that they won't consider tapering unless full employment status be visible. So whatever it means, that may take 12, it may take 18 months. And what about the inflation, the speeding up pace of surging prices? Fed hasn't really got back to this. And very important topic of yesterday's meeting was when Fed has spoken about their measures that should prevent more repo market blowups. It means that the domestic standing repo facility will have a minimum bit rate of 0.25% with aggregate operation limit of 500 billion bucks, and also more importantly, as headline says, they are also launching foreign overnight repo facility that will offer overnight repo at a rate of as well 0.25% for to foreign central banks and international accounts against their holdings. So Jeremy Powell asked about this whole process, this reverse repo program. Firmly claimed that he thinks this program is doing what it's supposed to do and what they expect it to do. So he also assuring that this program lets the federal funds rate stays within the target range. So one way they are trying to assure us it's tapering approaching, and other way they are just extending their reverse purchase repo program. So it means that they probably will buy up all foreign assets just because they can. So it's really funny how the elites just refuse to let markets function on their own and want to make, I don't know, maybe a zombie out of it. Now let's get to indexes outlook, and we'll discuss over why 10x is underperforming recently. This chart, due to analysts, should be at least stable or even better rise. So why it's declining? So let's look closer at this proxy for long-term growth economy outlook asset. So right now we are at the 1.269 level, and there are some explanations of this decline. The first one is obviously a spread of the Delta variant virus that may raise concerns investors about the possible economical slowdowns. The next one is moderate but sure inflation that not coincides with interest rate hikes right now, so it's also an area to be bothered. And the last one, last but not least one, is that we have broken through this important technical pattern that just getting things as it is, and the price decline has be given momentum. So right now we can find there are some reasons of this recent decline. Macro worries can obviously be the most dominant factors of this decrease, but this another factor that is a Fibonacci extension, and the fact that we are getting to the 0.5 level should be an area of significance where some bulls may turn up, so it's worth watching. And we are getting to crypto outlook, and we are observing cautiously how Grayscale GBTC shares are performing. So right now we have a chart of a price of Bitcoin that is signed by a black mark, and we have a net native asset value of BTC of GBTC fund. And we can find that during this period of the previous year up to March of 2021, we were in a positive territory where clients of this fund had to pay higher prices than it was on the spot market for bitcoins. And in the past, this period of time has coincided with a bull market. After March of 2021, the demand for bitcoins has dropped, and we have right now entered a negative territory. So recently we can find that we have narrowed the discount relative to the underlying cryptocurrency held in the fund. Due to this price surge, demand has occurred, and the buyers might be using GBTC shares as a bet on the recent recovery rally. So it's interesting to watch right now whether we will cross this zero native asset value level, whether this demand be sufficient in this secondary market and be able to push shares of GBTC back to this bull area. So this cross of zero native asset value line will be an possible sign that will be very welcomed by the crypto industry, and may have a significance of commencing another second wave of bull market for crypto currency. Nevertheless, bear in mind we are right now in a very interesting spot for the Bitcoin chart, where we are just touching 41k level that has been unavailable for the bulls throughout the recent period. So it may bring us to a concern that bears will start slowly but surely turn up in this area and bring Bitcoin's price a bit lower. So right now we can find that we have on the logarithmic chart confirmed that we are in this bull trend since the pandemic outbreak, but right now need to confirm entering into another wave of a growth. And right now let's get to trade idea, and we are talking over Teladoc Health. That is one of the most favorite company of Katie Wood that has great growth potential. During 2019 we were in a steady uptrend. Right now we are consolidating with a pullback to this $140 area, and we can find then that we are right now forming a double bottom pattern with a very strong volume on this candle. Nevertheless, we had since April of 2020 decreasing and turning up below expectations earnings of the company. However, we can find that earnings per share for the next year is getting to the 63%. So it might get this company might get much more profitable in the upcoming years. Right now, the utilization and growth of the recent years may be a little bit hard to replicate in this 2021-2022 area, but some market analysts still give it a chance to bring over 190 and even 200 with the highest expectations of getting even $291. So during this 12-month forecast, everything may happen. Right now we are at the lowest point of this forecast at 1.153, and this right now formation gives us an opportunity of getting much higher. I would just get back to this Guru Focus site where we can find some statistics of fundamental analysis, so we can find that regarding analysis value, we are right below the area of the average line, and we can also assume that this chart after this high volume bar is getting at least to this 170 area and even up to 190 straight. So we can find right now, let's get to this 4-hour chart, that this growth should be maintained. So I would consider the possible pullback, if any, to this 144 area. That would be a great opportunity to buy. However, I don't really find pullback too low, as we would just stay during this 150 area. This area is a great chance to get a buy bet position. So just to draw our trading board with risk reward ratio, it would be something like, or maybe it's our first target, and for this I would assume that's over 2.6 risk reward ratio. So a possible stop loss I would put just at 1.133 US dollars. So just remember that if that price will stay longer in this area, I wouldn't take this trade. The possible date that this trade will be valid be 3 days from now. So if we just will stay longer in this area of 149 and 155, I wouldn't take this trade. I expect this price to get higher during next few days. And that's it for now. If you have any questions, remember to ask them in the comments section below. Thank you very much for watching. Give me a like if you have enjoyed, and see you tomorrow.